Looks like following harassment by the US government, Elon Musk is lashing out at them this time around. Ladies and gentlemen, here in this video, we're going to get into all of your most recent developments with Tesla, everything you need to know, as well as put our markets into context with some historical data points. And we have quite a few of those to share in this video. We're going to get into a bunch of different things. One thing in particular I do want to point out is this comment on the last video that I put out about 12 hours ago from Craig Marley 5926. He says, fascinating analysis. I just checked inventory for Southwest Ontario here in Canada, and there are 19 new Model 3s. Probably people are waiting for the Highland, but there are 0 Model Ys in inventory. Like 0. Most interesting. I talked about this in the last video that essentially in my area, there used to be like 10 Model 3s just a week ago, and there's literally none. And there's no all-wheel drives. The lowest priced Model 3s are gone. That's a big reason why I think US deliveries may outperform big time for this quarter. Go check your local area and let me know down below in the comment section. Is there a lot of inventory? Is there not that much? I think that collectively can give us a better understanding of where these delivery numbers might be. All in Talk on X made this post and shared this TikTok that says, quote, they've now weaponized multiple federal agencies to go after Elon on 3 cases that seem transparently trumped up. Number 1, a glass house. Number 2, not hiring enough refugees to national security roles. Number 3, canceling an $885 million contract with Starlink, which is by far the best rural internet service. Elon Musk responds and says, let's not forget the White House giving Tesla the cold shoulder, excluding us from the EV summit and crediting GM with, quote, leading the electric car revolution in the same quarter that they delivered 26 electric cars. Not a typo. And Tesla delivered 300,000. This comes after FCC Commissioner Brandon Carr says today the Federal Communications Commission adds itself to the growing list of administrative agencies that are taking action against Elon Musk's businesses. This comes after the FCC was forced to revoke Starlink's $885 million contract, and Brendan Carr went on to talk about all of the different government agencies that are basically forced to boycott anything to do with Elon. This really makes you raise an eyebrow and think to yourself, what's really going on here? Let me know what you think down below in the comment section. Tesla's global inventory numbers continuing to see a decline across the board, most notably for the Model Y. That has really started to fall off, considering that's the most popular vehicle in the world, at least so far for 2023, which you're almost to the end of the year, so I'm sure Tesla's Model Y is going to get that title. Well, it's really starting to fall off. The Model 3 inventory has been low. The Model S and the Model X is at some of the lowest points it's been at in all of 2023. Tesla's search trend activity via Google is pretty much in alignment with the Cybertruck Model 3 and the Model Y, sitting in the low 30s, which, considering the Cybertruck is a new product and is still holding good search trend data compared to more legacy products, the Model Y, the Model 3, that looks like good news to me. According to the most recent AI investor sentiment survey, the bulls continue to be in control. 52.9% of investors are bullish, 26.2% of investors are neutral, and 20.9% of investors are bearish. And Tesla has started to advertise more, now running about 400 different ads. A lot of these are promoting leasing, which is a more affordable way to get into a Tesla because you're essentially only financing a portion of the vehicle itself. So that's what seems like is boosting the total ads number, which makes sense if consumers are not doing all too well. To advertise $329 a month for a Model 3, That's a pretty effective way to spend your ad dollars in this market environment, at least in my opinion. Tesla's option activity on Friday was remarkably bullish. I'm actually surprised. You had 651 orders totaling $708 million with a positive order value of 75%. Get this, over the past week, you have seen 5,400 orders totaling $9.11 billion with a positive order value of 47%, heading into an extended holiday period when theta does occur on every single day, including days the markets are closed. So the theta decay over this, 3-day period where markets are closed is higher than normal. I mean, 75% positive order value is showing quite a few new positions likely were taken to the bullish side in Tesla stock on Friday. That's overall impressive. To the call side, you had volume of 64.16%. To the put side, volume of 35.84%. Tesla's short interest sits at 3.28% with $22.52 billion worth of short positions. Tesla remains the most heavily shorted stock on our markets. Mark Newton, FundStrat's head of technical research, says small cap stocks, the IWM ETF specifically, is breaking out to a new high that you have not seen since the beginning of 2022. This is confirmation of likely higher prices to come. This is where a lot of people might step into interest rate sensitive names and really start to buy them up. That's going to be great news for Tesla. If small caps outperform, Tesla should really outperform. As you know, our next big catalyst for Tesla is delivery numbers for Q4. I expect between 500,000 and 520,000 deliveries, notably higher than Wall Street's estimates. But really, all we need is anything above 475,000. Anything less than that, the stock's going to get beat up. Anything higher than that, well, is going to be good news. Anything over 500,000 is really good news. That's why I think it is important that you guys check out the inventory in your local area and comment down below what it's looking like, because we just don't have a lot of data on the US and whether Tesla has a 500,000 plus delivery quarter or misses the estimates. It's really going to come down to the US because we have a pretty good picture on where the rest of the world's delivery numbers already are. But here in this upcoming week, you're probably going to see more bets being taken in Tesla, bullish and bearish, in preparation for this delivery number catalyst, which will come out in the first couple days of 2024. And here's some more good news for the bulls. If you are bullish, well, this is great. Households have near a record level of liquid assets going into 2024. You can see the dot-com bust period, the great financial crisis period, and now where we are at $1.8 trillion. A lot of this is not going to be invested back into our markets, but some of this will. There is still about $6.2 trillion in money market funds. This is money that is already invested, and money market funds as a liquid way to be in treasuries. This could be sold or bought any given day, so you can pull your money out quickly, take that back into stocks if you think stocks now have a better risk to reward profile than your 4 or 5% yield that you're getting in your money market funds. And at this point, it seems obvious. Money is going to come out of here, move into stocks. The timeline on this is uncertain. We could see this really accelerate in this upcoming week, right? Coming tomorrow, over the next 4 days. Or it could be a while before a lot of this money does ultimately flip. The longer it takes, honestly, the more time you have to buy. So that's probably a good thing for the bulls. But there is a substantial amount of money on the sidelines still. Game of Trades shares this post. Yield curve inversions have incredible track records of anticipating recessions. The current inversion has hit levels reminiscent of 1928. This was the year right before the Great Depression. Keep in mind, there's typically a lag time between inversions and recessions. And that's what you can see here. You're, pretty close to a record inversion. And the time that we have been inverted, it's been a while. So if you are a bear, this is one of the things that the bears are holding on to. But again, this time is really unprecedented. We never had a period of time in which we printed so much money, seen very high inflation, forced the Fed to raise rates. Now inflation's coming down. The Fed can take their foot off the gas pedal in terms of raising rates, start to be more accommodative to the economy. We've just never been in this period of time. And this is one of the things that a lot of people point to say we are definitively heading into a recession. It feels like the average citizen has been in a recession, but they've had a job because inflation has been so high and companies have been taking in record amounts of money. But it feels like we've been in a recession for 2 years now. You could just as easily make the argument that maybe the economy does expand in 2024. As inflation does come down, as the Fed lowers rates, as people are able to sell their homes, in which there's a lot of equity in homes, buy a new home for hopefully 4 to 5% by the end of 2024, well, some people might have a lot more money to spend in the economy next year. Just the price of gas falling alone is a big help to basically everyone out there. These are just a few reasons why the economy may actually do well in 2024, believe it or not. But then again, there are some alarming statistics as well. US adults with more credit card debt than total savings. In 2021, it was 21%. In 2022, it was 27%. And now in 2023, it's 36%. This is a little alarming. At least the trend is obviously not going in the right direction. And really, if you've been an investor in our markets, 2023 has probably not been such a great year unless you're in Magnificent 7 names. Here's the median stock return versus the S&P 500. You are down 16% for 2023 in dot-com bubble territory. This is because the most heavily weighted stocks to your index, Apple, Microsoft, Google, Amazon, those stocks have done well in 2023, whereas the average stock has not. That's why median stock returns are so much lower than S&P 500 stock returns. This is one of the reasons why I think you're going to see a catch-up effect in 2024. You're either going to see a catch-up effect where your average stock catches up to big tech, at least to some degree, or you see a catch down, a fall of big tech down to where your average stock is. Let me know what you think it will be in 2024. And again, to highlight this point, here are the top 10 holdings in the S&P 500 Christmas of 2013. Apple was 3.1%. Today, Apple is 7.1%. Microsoft was 1.7% in 2013. Today, it is 7%. Google was 1.9% in 2023. Today, it is 3.9%. Amazon wasn't even in the top 10. Nvidia was not in the top 10. Facebook wasn't in the top 10. Tesla was not. Berkshire was not. Broadcom was not. JP Morgan seeing a similar allocation to what they had in 2013. But you understand what I'm trying to say here, I hope. The concentration in the S&P 500 is unlike anything we've ever seen before. U.S. Treasuries have seen an inflow of $177 billion this year, the highest amount in history, back-to-back years of record inflows. AJ on X writes, Autocar's assertion that the EQE outperforms the Plaid is baffling. The EQE falls short in every performance metric. It's less efficient, has a shorter range, slower acceleration, but a higher price. To achieve the EQE's advertised 0 to 100 kilometer time of 3.5 seconds, Mercedes had to resort to trickery, including low gearing, as evidenced by low top speed, which further highlights the EQE's inferior powertrain and heavier weight compared to the Plaid. There is currently no car which can beat the Tesla Model S Plaid anywhere near the Plaid's price point period. This is likely again an attack on Elon Musk and Tesla. Greg IP on X, he's the chief economics commentator for the Wall Street Journal. He says, has a recession been avoided? Probably, but not guaranteed. There are still lags. After subtracting healthcare and government, employment growth is pretty weak. But as financial conditions loosen, whatever your recession probabilities were, you have to lower them. That is also great news for Tesla stock investors. Currently, markets are pricing in 6 rate cuts for 2024. That's going to take the Fed funds rate to 3.75 to 4%. There's a 34.4% chance of 7 rate cuts. So you're pretty close to pricing in a rate cut at every Fed meeting starting in March. If you start to price in 8 rate cuts, then you're looking at a 50 basis point rate cut at least one meeting. Things could really turn into a really good situation for stocks if inflation continues to fall and we're actually faced with the odds of deflation next year, which that's what looks like could be coming according to Cathie Wood. Deflation will happen in 2024. Then you're going to open up the floodgates of capital heading back into stocks. That's going to be very bullish for Tesla if we can manage to avoid a technical recession. As I have said many times here on this channel, the worst thing that can happen to a president running for re-election is a recession. You don't think the Fed is politically motivated? You don't think so? Well, let me tell you, they absolutely are. When Trump said to cut rates in 2019, what did Jerome Powell do? He cut rates 3 times. When people are complaining about inflation, what happens? The Fed starts to raise rates. When the economy looks like it's heading into a recession at some point in 2024, which I think will happen, what's the Fed going to do? Well, they will cut rates to 0 before they allow a recession to happen, because you've never seen a president win a re-election during an active recession. Only William Taft in 1913 won a re-election after you had just come out of a recession. So the historical precedence does not look good if there's a recession next year. These are all reasons I am bullish on Tesla stock. Over the next 12 months or so, I think a recession is actually a much bigger problem for 2025 or potentially 2026. But then again, there's always going to be that chance we could go into a recession next year. If that were to happen, I really wouldn't expect Tesla stock to do much from here. Maybe as high as $300 per share. But if we have a recession next year, don't expect any gains in Tesla, at least depending on when that recession happens, for quite a while during that period of time. If it happens soon in 2024, maybe by the end of the year, you could eke out a little gain from these prices, but it would not be a good or pleasant scenario for the Tesla bulls to forecast a recession next year. Again, I don't want to come off as a perma bull here because there's obviously an inverted yield curve. There's other things that support we might go into recession. I just think the odds are very low. If we do happen to fall into recession, well, don't expect Tesla stock to do anything for probably the next 12 months or so. So that would be a pretty bad outcome for Tesla bulls. That's going to do it for this video. Hit the like button and subscribe to the channel if you made it to the end of it. If you guys want to come trade with us live in real time as well, every time I make a trade, I do send out alerts. You can come grow, come learn, come chat with me and other like-minded investors and traders. Great place to be. We have been hitting some home run trades over there, and hopefully that does continue. There's a lot of risk management that goes involved. There's a lot of discipline you need to have in that community. We're not exactly doing risk-free trading over there. There's definitely some risk in those trades. So if you guys want to check it out, come join us. But obviously returns are not guaranteed, and you could lose all of your money if you're not disciplined and if you're not taking risk management into calculations. So that's going to do it. Thank you for watching. Enjoy the rest of your day. Merry Christmas, and I will see you in the next one.